sunlight is slowly returning to the Nordics. New Year's resolutions have been made and many probably already broken. And economic uncertainty is once again dominating the headlines in the start of 2026. Gold, silver, oil, cryptocurrencies and the US stock markets have all been signaling turbulent times lately. But how does this all affect us up here in the Nordics? That's why you are here, Morten Trusty. Welcome to you.
Thank you very much, Evan.
Are you guilty of breaking any New Year's resolutions already?
Probably am, but like to keep those for myself, both the resolutions, and it's easier to break them if nobody knows.
That's true, that's true. From your point of view, how does it look economically for the Nordic households right now?
It actually looks quite good, as I have about 30 slides that will paint that picture, that it looks better than it has done for quite some time. And there are also bigger differences between different countries in the Nordics right now, where we see especially the Finnish economy is struggling quite much and higher unemployment rates, whereas the longer west you go in the Nordics, the better the economy looks and the better the ability to pay your bills and loans looks as well.
Look forward to hearing it, Morten. The stage is yours.
Thank you very much, Ivan, and thank you so much for joining us this morning. For the next 30 minutes, we will take a closer look at the Nordic economies and the Nordic debt collection numbers. As you might know, Intrum is the market leader in all 4 Nordic countries, which means that we have quite a good overview on payment problems among both households and businesses. And as always, when we look at our debt collection numbers, both claims or investment claims are excluded from the data, and the data is adjusted for market shares as well, because we want to give a as generic picture as possible on where payment problems are currently heading. And as the headline said, it's a great, I would like to call it the great debt collection paradox. And the paradox lies within that we live in a world with a lot of bad news coming in almost every week, and one would expect all that bad news to transmit into worse economic performance and lower growth and correspondingly more debt collection problems. But we see that that's not the case at all, and it's almost the other way around. And that means that even if the bad news keeps on coming in, debt collection problems or payment problems are decreasing day by day. So we will try to explain why this is the case and during the next 30 minutes. So let's start by looking a little bit closer at the Nordic economies as we enter 2026. And we see that despite the geopolitical and noise that's quite loud at the moment, and all the things going on with international trade, one would expect the Nordic economies to perform quite bad and be quite affected by all that negative news. And the reason for that is, when we look at the Nordic economies from a macro point of view, they are small and they are open. Small meaning that the value added in general is low compared to bigger countries, which is a obvious fact, I would say. And the other is that we are open. We trade a lot with other countries, and with those two factors, one would expect trade wars and geopolitical noise, etc., to transmit into worse economic performances. But we see that overall the Nordic economies are quite resilient to all that noise that's going on at the moment. And that is quite clear when we look at the GDP numbers. A couple of points here. First, it's became a lot clearer during the last 2 years that the Finnish economy is really struggling. So GDP numbers are are just around what they were before the pandemic started in 2019, whereas we see the economic performances in the rest of the Nordic countries and in the euro area as well picked up and gathered pace during 2025, which means that the added value increased, or the value added decreased during 2025. And when the economy grows, payment problems tend to go the other way. And it's also worth noting here that there is a clear correlation between payment problems and economic performance as well. When you see the Danish and Norwegian economy is outperforming Finland, of course, but also Sweden and the euro area as well. And although prices or the cost of living crisis is maybe fresh in everyone's mind, and we're reminded of that every time we go to the store, where chocolate and milk and bread are much more expensive than you remember, it's also worth mentioning that the cost of living crisis is now over by quite some distance. So when we look at the inflation numbers here for the Nordics, we see that the cost of living crisis peaked in 2022-2023. Price growth has since come down, and now the numbers are ballpark where the long-term inflation target on 2% annual growth is. And of course, in Sweden and Finland, inflation is down because demand, as you saw on the previous slide, is down as well. It's now close to zero, whereas inflation are still overshooting in the Norwegian economy. But overall, and the main takeaway here is that the prices are now clearly under control, and they have been under control for quite some time, and wages grow faster than inflation everywhere in the Nordics, which means that purchasing power are going up. And to reflect that, here are the annual growth in real wages on a year-by-year basis. And as you can see, the shaded area here is the cost of living crisis, where there are some time lags, etc., that makes the annual numbers not so precise as the monthly numbers. But the shaded area could be branded as the cost of living crisis, and we see that in 2024 and in 2025, the real wages are growing at around 2 percentage points. That means that most Nordic households are day by day a little better off and can afford to buy more stuff for their wages. And that should put everyone in a high spirit and a good mood, but that is clearly not the case. And the way we measure that is that we look at consumer confidence, and that is measured as an index. And when the value is above zero, we tend to overall have a more positive outlook on both our personal economy and our country's economy as well. And when you are positive to the future, you tend to buy a new car or a new house or a new computer a lot more often than compared to when you are negative. And looking then at the consumer confidence in the Nordics, we saw that when prices rose in 2022 and 2023, nothing puts consumers in a more foul mood than higher prices. And since prices, again, is under control, one would expect consumers to be more positive as well and to spend more than they currently are and be in a better mood. But we see that the mood is still not positive, and even though it's not as bad as it was when prices increased by almost 10% a year. So we are in a little better mood, but still the outlook is quite bleak, especially when you take into consideration the growth in real wages during the last couple of years. So that so the cost of living crisis is still fresh in our mind. And we also get a lot of negative news coming in week by week, which means that we are quite risk averse when it comes to spending, and we tend to save up the extra purchasing power instead of spending. Interest rates has also been cut in half, with the exception of the Norwegian policy rates there, which also helped a lot out and played a significant role looking at the debt collection numbers, particularly in Sweden and Finland, but in Norway as well. The lower interest rates certainly helped during 2025, and it's a quite fast way to ease households' financial burdens. And I mentioned cautious consumers. Here you can see the savings rates for the last 6 to 7 years, but I want you to pay attention to the last couple of years. Even if purchasing power is increasing, savings rates are increasing as well, which means that on average, when a Nordic household gets an extra krona or an extra euro in income, we tend to save quite a lot of that extra income for a more rainy day. And the more you save, and the more you have in your savings account, the more distance you put yourself to debt collection problems. And mentioning cautious consumers, and maybe the best way to look at it is to look at lending growth on consumer credit. Typically, if consumers are not that concerned about the future and I think tomorrow will be better than today, well, then you're not so afraid to take up a short-term loan to increase your consumption today. But when we look at the annual lending growth, we see that it's hovering around the 2.5% point mark, which is in line with inflation and somewhat lower than the income growth or the growth in purchasing power, which means that in real terms, short-term lending is decreasing across the Nordics, and that is also in line with cautious and risk-averse consumers that want to save up for a rainy day, even if things have looked better for quite some time now. Before we go on to the debt collection number, just a quick remark on the unemployment numbers. And you can see that there is kind of two teams here, where we have the western part of the Nordics, which is Norway and Denmark, has a significantly lower unemployment rate compared to Sweden and Finland. And particularly in Finland, the increase here and the in the second half of 2025 leaves reasons for concern going forward, especially because it takes some time before the unemployment numbers transmit into debt collection problems. But it's really can be separated into two different parts, whereas one would expect that during 2026 those cracks in a lot of households' economy due to higher unemployment will appear in Sweden and Finland, but there are no such signs in Norway and Denmark. And currently, cautious and risk aversion are dominating the unemployment factor in Sweden and Finland, but that is not likely to last long term. So let's then look at the debt collection numbers for consumers first. And when we see out the number of debt collection cases in 2025, we see that, and when we compare the growth rate in 2025, which is light shaded boxes, to the dark shaded ones in 2024, it's a trend across all Nordic countries that the number of debt collection, the increase in number of debt collection claims went down in 2025 compared to 2024. And with the exception of Norway, there were negative growth in Sweden, Denmark, and Finland in 2025 compared to 2024. So that means a couple of things, and what maybe is the main takeaway here is that risk aversion are currently dominating payment problem trends. That means that we take up as little risk as possible, and we hold on to the. We are careful with our spending, and that again transmit into fewer debt collection cases. And even if there are positive growth in Norway, there are some reasons to be not so concerned about that growth as well, and that is expected to come down further in 2026 as well. And when we look at the amounts to collection, there is, as I mentioned, the amounts to collection in Finland, which is the dark blue, in Sweden, which is the purple one. The amounts to collection, and this is the index starting in 2022, so started at the start of the cost of living crisis. We see that amounts have decreased quite a lot during 2025, and that is a direct consequence of interest rates are cut in half. Which means that banking products are a lot cheaper in 2025 compared to 2024. And when products tend to get cheaper, more people are able to pay them, and the less debt collection on those kind of products appear, and that drives amounts to collection down as well. And when we look at the in this kind of longer picture on the debt collection claim, it's quite clear that when we start from 2022, at the start of 2022, which is the kind of the start of the cost of living crisis, there's no real argument that the cost of living crisis generated kind of a next level on debt collection claim and late payments. As you can see in Norway and Finland, during the last 2 years, the levels have fallen somewhat, and in Sweden and Denmark, they are below 20% higher for during the last 3 years. And given the severity of the cost of living crisis, and there's quite a long time between every time we see more than 1 year of real income decreases, it's fair to say that the Norwegian household are doing quite well and are performing quite well and are continuing to do so during the cost of living crisis, and the long-term effects seem to be more mental than real. And what I mean by mental is when we go back to the consumer confidence, we are still nagging in our own heads about the previous price hikes. And if you're like me, every time you go to the store and you want to buy a chocolate at the end, and breaking your New Year's resolution while you're at it, my first thought is, it's too expensive. I can't buy it. It's too expensive. And then I call my dad and say how expensive it was, and he has a 10-minute rant on how everything is more expensive. But then I said to him, well, your pension is adjusted as well, and my wage is adjusted as well, so it's really not more expensive. But it's hard to forget. It's hard to forget. So even though we are still not that confident, and we still would like prices to go down, which is not a good thing and would be really bad news, we still are in a much better financial place today compared to the start of the cost of living crisis in 2022. So let's move on to to business payments. And again, we see that the economy and the economic performance is a key driver behind late business payments and bankruptcies as well. So let's start by looking at the annual bankruptcy data. And there are some general trends there first, and then there are some country-specific trends appearing in 2025. So let's start with the general trends. As you can see, when the pandemic started and for the first few years of the pandemic, bankruptcy numbers in general went down across the Nordic. And as you all know, bankruptcy numbers went down because there was a wide range of economic policies aimed at preventing bankruptcies from happening. So some kind of public sector insurance schemes were introduced across the Nordic region. Once the pandemic was over, those insurances were lifted. Once the insurances were lifted, bankruptcy numbers started to increase again in 2022, and that continued into 2023 and 2024. Whereas in 2025, you could see clearly that the bankruptcy numbers are going in different directions. In Norway, Sweden, and Denmark, bankruptcy numbers went down in 2025 compared to 2024, but bankruptcy numbers went up quite a lot in Finland. And that really reflects the overall economic performance, where especially the Danish and Norwegian economy are outperforming the Finnish economy, and that reflects into higher bankruptcy numbers in Finland. And bankruptcy numbers, again, are correlated to debt collection numbers as well. And when we look at the late or debt collection numbers that belongs to businesses and compare that with the bankruptcy numbers and take out the growth rates for 2024 for 2025 compared to 2024, we can see that is, first of all, there's a clear correlation, and the correlation is obvious because behind every bankruptcy there are debt collection cases. That's kind of by definition, the correlation is there. And as you can see in the interim data as well, correspond quite well, where we can see in Finland there was an over 10% growth in debt collection cases and the bankruptcy numbers as well, whereas in Norway, Sweden, and Denmark, debt collection numbers and bankruptcies went down in 2025, which again is maybe somewhat a surprise when if you look at the news every day, but when you look at the economic numbers, it's not that surprising at all. And one of the key drivers here is that especially within construction and real estate, the economic or the economy within that sector is turning slightly upwards again after a lot of payment problem due to low activity, building activity, and higher interest rates during the last couple of years. And again, inflation numbers during the last years, one would expect maybe that to create a lot of late payments. But as you can see, during the last years, we are just a little above where we was at the start of the cost of living crisis, which means that the cost of living crisis really did not spread into the broader perspective of late business payments. So let's give a quick summary and an outlook. And I think the main takeaway here is two things. First, risk aversion. Nordic households are holding on to their money tight as the bad news keeps on coming in. That's unlikely to change very much in 2026. And on the business side, we see that credit risk is again quite clearly correlated with economic activity, which is creating differences among the Nordic countries as the economic performance is differing at a higher pace than before. So to sum up in some points, separate noise from real economic activity. Look at the numbers is more important than ever. Growth in consumer debt collection cases, overall a decreasing trend in 2025. Amounts to collection as well follow inflation and interest rates down. Risk aversion, already mentioned. Debt collection among businesses follows the economic activities. And if there is a standout factor here, watch out for particularly the Finnish, but also the Swedish households in 2026, as unemployment there has risen quite a lot. At some point, the lack of income will dominate the risk aversion, because once unemployment number are reaching a certain threshold points, you are unable to pay your credit off at a higher pace than risk aversion are keeping others from payment problems in 2026. So keep an eye out for Finland and in particular, and Sweden as well in 2026, where the economy looks much more vulnerable compared to Norway and Denmark. So that will be my final remark.
Thank you, Morten. Thank you. And thank you, everyone, for watching. We wish you a pleasant day.